Hey traders, welcome to a global macro update. We're also going to be covering BTC as well as some Ethereum for today. But to start off the video, we're going to go over the metals as well as the US dollar because that's going to tie into basically every asset that we're talking about. They are all kind of correlated and they move in sync to each other. Some are risk on, some are risk off. And we discussed that within the crypto market update as well as the global macro. So to start off the video, let's first look at what gold is doing right now. So we did see a series of higher lows. So this is a low, a higher low was set right here, and then a series of higher lows. You can connect that with an ascending trend line. We did see a break to the downside, breaking the series of higher lows. So we did break these set of lows. So we are looking to hold that as a potential level of support. Now we could see a possible break in that level of support, but overall, I'm still looking for longs. We see a series of lower highs, and ideally we want to see a potential descending triangle right here, and then we're looking to see a slight contraction in the volatility, and then the expansion phase where we're looking to see a previous resistance break as a new level and break and hold as a new level of support, and then we're looking to continue the overall momentum once we've seen validation from the buyers or the bulls that there's going to be buy pressure and demand in that previous resistance. So we can see within this structure, if we look at the price, it's just under 2K. This is a $2,000 range. So we know that this level has been a major level of significance, both as a resistance, and it does look like it's now going to be a new level of support. On a larger time frame, it does look good. But when you move into a smaller time frame, it does actually break that previous high, which is probably right around there. So we're under it a little bit, but overall, I still view this as a pullback after a major break, which is that 2011 high, which we traded up to and then fell and we had that massive bear market. Broke out of that $1,400 zone, and this is still the bullish push moving from that $1,400 zone, breaking that previous high, and then this is a pullback, a market breath before the next impulsive push that's going to take the price higher. That's going to be my overall bias for gold, and we're going to be looking to carry the trend for this asset. Now this is very similar to silver, where we did see a series of higher lows push the price up, but we did get a failure of that symmetrical triangle. The price came down and is now holding a previous level of resistance, which is now turning into a new level of support. We did see a failure of that support, but now we're going to be depending on this zone for our next level of support. And that's going to be a descending zone right there. And that's why we look for a break and retest confirmation before we look for entries, because we're not going to enter before the price action creates the impulsive push to break out of the price action pattern that we're trading. So right now we see nice impulsive push from the bulls, which is great to see. We might see a nice double bottom. I would not look to enter there. I'd like to see it contract a little bit further so we could see another previous high right here. Maybe that was a previous resistance turning into new previous support right here, turning into a new level of resistance. So around maybe $26, maybe the possible level of support after the impulsive push that validates us that yes, this is the impulsive push to break the contraction, and now we are in the expansion part of the market where we're looking to enter, right? So that is the goal for us, is to enter before the expansionary phase, right when we see it start moving out of the contraction, which is the descending triangle formation that we see right here. So now on to the gold and silver ratio. So this just represents how many ounces of silver you can get for 1 ounce of gold, and we can currently see that it is around 81 ounces of silver for 1 ounce of gold. So this zone has been a key level of support, which is right now turning into a new level of resistance. So if we are expecting both gold and silver to move up, because this is a metals bull market, I'm expecting the gold and silver ratio to move down, because silver is going to be appreciating at a greater rate than gold. I'm not saying gold is not going to be appreciating. Gold, I think, will still be a very sought after asset for many investors and traders, but I think silver is going to be the more volatile asset that's going to play off of gold, that's going to be driving the price higher. So overall, I'm bullish on silver more so than gold. Does not mean I'm not bullish on gold, but if I had to be trading one asset, it would be silver. So that's going to be my take on the metals market. In short, is we do see a nice correlation between the price action or the chart of gold, silver, as well as the gold and silver ratio, where we're going to be holding key levels of supports and we're going to be holding key levels of resistances for the actual ratio. Because in bull markets, like we saw back in the late 70s, we see silver appreciate at a greater rate than gold. So that's going to be my overall take. We're now going to look at the US dollar, where if we see the previous lows right here are acting as new levels of resistance, and this projection right here actually came from two previous lower highs, which is now creating our third level of resistance. We were able to break this horizontal level of resistance, which I was a little bit surprised about, but we do see sell pressure coming in quite quickly, and if we see a break of this previous resistance and a failure to hold as a support, I think there's going to be a lot of people who are long the US dollar in terms of the FX markets, in terms of overall sentiment. And if we do get a break below this zone, this key significant level, I think we could see a potential break. We may be able to add an ascending trend line connecting the higher lows. We'll see where it goes. That's going to be a key level of confluence for supply as well as demand. But once we start to see, and if we start to see this start to break down, that could be an indication that there's going to be a pretty big rally in gold, silver, crypto, in my personal opinion. So we're going to be looking for that for the correlation between the metals market and the US dollar, as well as if this starts to move to the downside. Definitely, I think SPX, other risk on assets, NASDAQ, Russell 2000, a lot of the stock market, equities, ETFs and indexes, and even single shares and companies will start appreciating as well, because if the US dollar is going down, it's overall weakness within the US dollar, which will raise the price of assets, even if the actual asset doesn't really change in value. It's just more units of the US dollar that it takes to acquire that certain share or whatever asset you're purchasing. So that is going to be a little bit of the metals as well as the US dollar. We're now going to get into the equities market. So understanding what the US dollar is doing, we can see that overall it is looking like it's making sense. We do see that the S&P did create a head and shoulders and completed, but it did not hit target, which was around 3,100. That would be the height from the head to the neckline, and we just draw that same area out, and that would be the target for the head and shoulders. We are not able to hit it. We're about 50% where we have that previous resistance turned to a new level of support. Keep that level of support held so the price is not able to push below it. We see 1, 2, 3 validations of a key level of demand indicating there's buy pressure at that 30 to 30 range, and then we also see another high get created. This was that previous high. It got a higher high, and now we're seeing a higher low with a validation of a previous resistance turned to a new level of support. So just in terms of the market structure, it's looking like the SPX is slightly more bullish. We're getting a slight market structure. It's still in the correction phase because this major level of a right shoulder, once I think the right shoulder breaks, that's going to be that really major zone where a lot of the other equities markets are really going to be moving to the upside. But as of right now, we're getting a potential failure of the head and shoulders and a move to the upside and an aggression from the bulls and the buyers, which kind of makes sense looking at the rest of the markets here. So this is the volatility of the S&P. We see it die down. We want to see something like this if we're going to see a move to the upside for the S&P. We don't really ever see massive pushes to the upside, see huge increases in volatility. It's always going to be sell-offs that you're going to see these spikes in the VIX. So ideally, we're going to see something like this, where we're going to get a slight die-off in volatility, and that means that we're probably going to get a move to the upside for the S&P. So that's what we're going to be looking for. NASDAQ is holding that previous resistance to support and a support again. So this is a pretty aggressive pullback, but we have seen the NASDAQ just be so strong and resilient through kind of basically the entire market here, far exceeding many of the other indexes. We can see pretty aggressive sell-offs, double bottoms, and then rally to continue the overall move to the upside. And I think although this is very aggressive, we do see it pick up and hold that previous resistance, which is significant. And then the Vanguard total, basically world equity index, previous resistance, new level of support, also with a descending trend line connecting the lower highs getting broken to even further validate our break to the upside. Also shift in structure, so the indications just in terms of the price action, for me at least, tell me that the bulls are still looking at the price and looking for appreciating assets that are risk on, that are a little bit more risky but will provide a greater reward than, for example, bonds or obviously the US dollar, because that will give you nothing but slowly devalue your really net worth if you just keep it for decades and decades. So that's going to be some interesting stuff to look at on the S&P, NASDAQ, volatility of the S&P, as well as kind of the world equity, just overall risk on equity markets. So overall, it looks pretty bullish in my personal opinion. We're now going to hop into BTC and look at where that is. Just at the 2-day, because not a lot has changed. So what we're looking to see happen, let's just get this away from the screen, like so, and take a new picture. Just changing mouses here. I use two mouses. One is like a mouse pad kind of thing. So what we see right now is still, the previous video explains it in pretty good depth, but we see that this around 10K zone was a major level all throughout basically the second half of 2019 as well as all of 2020. Major level of significance that we were just unable to break. Once we had that strong push to the upside, you're going to have some level of correction. This, in our opinion, is still a correction from that impulsive push. Furthermore, we see this major level of resistance that is connecting the lower highs. This, I'm sure, if you're in the crypto market, is one of the largest triangles and the most significant potential breakout that the crypto world kind of has ever seen, because the triangle is absolutely massive, and this really validated it, especially these two lower highs. And this, you have 3 valid zones as well as the anchor, so you have 4 validations and rejections of this major level, which to me is enough of a validation that I can use it as a key zone for me to say if it's broken, it's going to be a loss in confidence from the sellers and a huge confidence boost for the buyers. And I think this is the push, and we're getting in our exhaustion phase right here, and we're going to get our next impulse push that's going to break the price higher. Let's get that a little bit cleaned up. And then if we're going to talk about this a little bit more, we do see a high right here, a lower high, and a lower high. So now we're connecting the lower highs, and we're getting a slight descending wedge right here after our impulsive push. You could call it a bull flag if you'd like, but ideally we're looking to see this 10K zone hold, and we're looking to see an impulsive push to break the price to the upside, and you're looking for a potential entry if it breaks that previous high, but I think a safer bet would be to wait until that previous high is broken. So you're going to be looking for a retest of this high as a new level of support, and then you're looking to see that price continue to the upside for you to be on the train to not the moon yet, but definitely to higher prices, potentially even to the all-time high. But you know, it does depend on your time frame and stuff. You could be looking from that high all the way to here and just using that as kind of your geometric target that you're looking for, which would, you know, be at like 24 or 25K. So that would be the type of move that you'd be looking for, similar to, you know, these moves had occurred before. Even shorts, obviously, you could have massive pushes, but you're looking to enter in these massive moves either to the upside or to the downside, not these teeny tiny things. And I think the next significant move is going to be to the upside. All right, so we're going to be looking at now Ethereum to end it off. And let's just get this off and this and go to the daily chart here. We're still creating lower highs, but we're really able to see that $320-ish range, $20-ish range is a major level of significance for the demand for the buyers. You can see previous resistance or previous support here again, support here again. We do see lower highs, so what we could do is create a potential descending trend line like so. Something like that. We see previous support turn to resistance, 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 resistance. So that's going to be my resistance right there. And then we see a potential projection zone right here. And then we're going to put it down. So at this point, what we're going to be looking for, let's just take a picture really quickly, is this $320-ish range right here, hold as a support area. We want to see these lower highs contract the volatility even further. So we want to see this potentially slightly move to the downside. We don't mind. We want to further contract the volatility towards the apex of the pattern. And then what we're looking for is a previous key level of resistance within the descending triangle formation will turn into a new level of support with potential type B candle closure like this, or a wick closure like this. Something that's going to validate that there's buyers holding the price here on a larger time frame. We're looking for 1 hour candle confirmation, 2 hour candle confirmation, 4 even. That would be ideal, but overall we're looking for further contraction and then a first impulsive push and a slight pullback validating a previous high. And once you see that validation, you're looking for a break of that previous high to get you into the trade to overall carry the trend to the upside and carry the momentum that we've seen. So massive bullish push, contraction and volatility, and then the next push is what we're looking for. So hopefully that gave you a little bit of insight as to what we're looking for and what we're scoping out in the markets. If you have any questions, drop them in the comment section below. We'll be happy to answer them. Hopefully you've been having a good trading week, and if you do enjoy the video and if you thought it was helpful, educational, entertaining, it'd be great if you give it a thumbs up and subscribe so we know to make more videos like this. Till next time, have a good one.